I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned into Traders Nation. Thanks for making us a part of your day, Don. I got a jam-packed show, man. Al Caicedo, he's back with us again today. He's president owner of CKS Summit Group. We're going to be talking about how U.S. savings rate have plunged, okay, over the last decade, and where's the savings? Nobody's saving anymore, apparently. So we're going to be talking with Al about that. Plus, Don and I are going to be remaining focused, certainly, on our towers. Towers are a staple in this volatile markets that we're seeing. Plus, we're going to bring data centers back on our list. So we got stocks, guests, and a whole lot more. Stay tuned right here to Traders Nation. We'll be right back.
Traders Nation, if you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation. Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation. Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, the great station.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
There's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
Hi, I'm Steve Forbes. You're watching Traders Nation.
Yeah, Steve-O. You can catch that interview with Steve Forbes over at our YouTube channel over YouTube. Check out Traders Nation there, all right? Subscribe, like, comment. Get involved, man, folks. Come on. Plus, plus over at our website, tradersnation.com, you can get all kinds of great content over there. We keep that updated pretty regular, Don, you know?
Well, here we are.
Yeah, pretty important, right?
That's right.
Hey, Don, so listen, Tower certainly is on our list here today. Bringing data centers back, okay? Data centers are looking good here, too. Certainly wanted to introduce them back to our viewers and listeners and what's going on out there. Don, your thoughts?
Well, look, you've reached the pinnacle in broadcasting when Kramer is now covering towers as well over on MSNBC. But in all seriousness, American Tower now trading at $203 today.
Yeah.
It's up $2.50. Big news on AMT today. They're making an acquisition in Africa. Remember, we've talked about, once you get the towers, then you get the clients. So they're making this acquisition in Africa, which is very rapidly growing. And once you put the tower up, it's residual revenue. So they're knocking off a company called Eaton Towers in Africa, which is going to add some 5,500 towers over there.
Wow.
And in a growing continent and in a growing area, American Tower up $2.50. And that, interestingly enough, the acquisition will be immediately accretive to earnings. So that's a good thing, and the stock's reacting favorably today.
Yeah, without a doubt. Trading there, right there around 204, like Don said. AMT, American Towers, Alpha Mary Tango is the phonics for that one. Trading about 306,000 shares here today, so volume is actually pretty good up on AMT. A lot of excitement and buzz going around that. Big, huge green candle today, man. This candle, take a look at this. Bring the charts up for everyone. Look at that candle, man. So it's like this huge candle engulfing the last 3 trading sessions, okay? Plus, Don, we got a dividend coming up on this, too. 92 cents a share right there on July 18th. And that's not that far away, Don. AMT.
Well, they're all REITs. They all pay a dividend. And this is a business where the barrier of entry is difficult at best. And so the stock is up today. And then we're going to move on here and talk about Crown Castle and SBAC.
Let's do that. Crown Castle International, CCI, certainly currently trading at $127.36. 504,000 shares exchanging hands here today. Find some love right here around the 2150-day moving average. Resistance, so look at this thing's in resistance at $130.30. Don, this has got a dividend play is what I was trying to say. Certainly that's coming up also here on the 16th of July. That's about $1.12 for Crown Castle International, CCI, Don.
Well, Crown Castle is domestic U.S. only, rapidly growing company.
Yeah.
Very well run, Texas-based, and this is another one. If you glance at the stock, trading in here at around 127, it's up $1.50 today.
Sure.
All these stocks, CCI, American Tower. We're going to talk about SBAC, all approaching back to their 52-week highs.
Yeah, totally. A couple down days recently, but that's okay. These companies are strong. Markets, this happens, right, Don? And certainly CCI. Crown Castle International, Charlie International is the phonics for CCI. SBAC, since you brought it up, Don, let's go ahead and talk about that. SBA Communications, currently trading that there at $210.63. Huge volume today. In fact, Don, on SBAC, 3 times the volume than normal. Okay, huge volume on SBAC.
Yes.
Love this stock also. Monster bullish engulfing candle here today, just like AMT, covering the last 2 trading sessions, though, not 3 but 2. Still nice. SBAC, Don.
Well, all of them. Barrier to entry difficult. Stocks all get whacked around on big down days.
Yeah.
However, as I've been mentioning all along, these are the stocks that are the first to rebound. And then, of course, you get a little news in the center, in the area today, the sector.
Yeah.
And here we are. And don't forget, that's a big thing now. We've been talking about towers for months, if not years.
Sure.
And only recently, the mainstream media has been picking up on these towers for a very simple reason.
Sure.
This is a business that is difficult to get into.
Yeah.
And so these companies that have been around for a long, long time are certainly well positioned for this 5G.
Yeah, Don, where have the talking heads been? Where have the pundits been with these?
Well,
like you said, we've been on this for I don't know how long. We've followed these all the way up their charts, hitting those new 52-week highs, blowing out those dividends like crazy for everybody. Now all of a sudden, they're on the radars of these other folks.
Yeah.
Interesting.
This is what happens. But this is I'm going to repeat it. It's a very difficult business just to go out and decide one day we're going to go into this business. So acquisitions of these companies, that may or may not be in the cards. They've got great track records here.
Yeah.
And so a few of them, these are the 3 major players. They may not want to be acquired just yet because they're having a good old time.
Yeah, totally. So here's the deal on this. So what Don's saying is a barrier of entry is very, very difficult. Here's why. Think about these. These are legacy companies, and because they're towers and because they're REITs, they sit on that property, they own that space, it's directly down on their footprint, right? So they own that. Think of it this way, and we've mentioned this before. Could you imagine, just for a moment, trying to start up a new railroad line? It's not going to happen, right? You got to own the land to lay the track. Well, this is kind of similar to that. You got to own the land to put the tower on it and stretch it across the nation or wherever. Very, very difficult, and that's why this space is so difficult. It's a barrier of entry. If you're wanting into this space, you got to buy yourself into this space for the most part, right, Don?
Yeah, and what's most exciting about this business on a go-forward basis is with the rollout of the 5G, every street light, every stop sign around America, to put it simple, is going to have a small tower on there to transmit the speeds of this 5G, which is being rolled out now by AT&T and a few other vendors in major markets across America. And so 5G is the wave of the future. These companies are right in the mix.
Yeah.
And they'll all be approached by the big carriers to see what they can do and get together to handle all this traffic.
Yeah, totally, Don. All right, so those are our towers. Hopefully you got them down. If you missed it, certainly check out the rebroadcast over at TradersNation.com today. Don, data centers, loving to have them back on our list. DLR, Digital Realty Trust, currently trading at $118.07, 66 K shares exchanging hands here today. Volume's a little bit weak today on DLR, but nonetheless trading right here at its 21-day moving average. And I'm liking DLR, certainly a steady staple in this arena, Don, trading above its 200-day moving average,
Yeah.
Don.
Okay, well, this is a company that's got revenues of around $3 billion and with a nice net income. They're paying a dividend, of course, as we've talked about. They are a real estate investment trust. We haven't been on top of them here on the live broadcast for a couple of our sessions.
Sure.
But this is a company that started trading publicly back in, I guess, I want to say '04, but I could be wrong on that. But the point is that the company has grown nicely. They made a big acquisition in 2017. They acquired DuPont Fabros technology, and that's kind of doubled the size of the company. So this is one that we want to keep our eyes on.
Sure.
And once again, this is another area. This is another tough barrier of entry business. You just don't go out one day and decide, we're going to build a data storage data center to handle all this traffic. And a note on these companies that for our listeners and viewers out there, every time you're on Google searching for something or you're over there at Amazon buying something, that transaction and data is probably flowing through one of these major data centers around the world.
Yeah, totally. You're absolutely right, Don. And since you mentioned it, it does have a dividend actually coming up here in July 13th of $1.08. Okay, all right. So that's that, Don. All right.
Okay.
So, coming up next, we got Al Caicedo. He's going to be with us today. We're going to be talking about the U.S. savings rate. It plunged. All right. Consumer confidence is through the roof, but God, what a disconnect there, right? So we're going to talk to Al about that. When we come back, Don, let's finish up with our data centers, okay? Sound good?
Yes.
All right, stay tuned. You are tuned in to Traders Nation. We'll be right back.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning.
Traders Nation, live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisi here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again Al Casado. He's president and owner of CKS Summit Group. Al, welcome back to Traders Nation. How are you today?
Hey, doing well. Thanks for having me.
Always a pleasure, Al. So listen, U.S. Savings rate plunges, but consumer spending soars. Are we just too confident here in the United States?
I think we are. I think, I always go back and think about this, and I share this with many people. I think that when we start seeing our balance sheets, for example, we've seen 401ks up again.
Sure.
We keep hearing that the markets have climbed, even though it's at the illusion that we have an economy that's really moving well.
Right.
And we look at our balance sheets and we feel like, hey, you know what? We have the assets, and once we start seeing that, then we start feeling, rich. We start feeling as though we have the money, and we get the confidence in saying, okay, now we can go out and spend.
Sure.
And we start spending, and then we start forgetting about the fact that we still need to save, and that maybe things are not as good as they seem.
Sure. Let's take that into focus, because I think you're absolutely right. It almost sounds like we're balance sheet rich, right? Yeah. We're cruising along. It's like, man, we were holding our breath for so long, and now the balance sheet's looking a little bit fatter, right? Things are humming along in the back office. Prosperity is the static of that's in the air, and certainly, that kind of drives that, doesn't it, Al?
Oh, absolutely. I think that we get exuberance, and there's a lot of exuberance in this market. We've had a long run.
Yeah.
Many people refuse to believe that it's going to come to an end.
Right.
And we're kind of hanging on. I think we're still hanging on and thinking that things are going well, when in reality, I think that there's some really strong headwinds ahead of us that we all need to be careful.
Yeah, I think so. There's something to be said about that too, because there is this feeling that it's not going to end, but good things always do, right? And there's a couple indicators that are in the future. We've seen a flattening of the yield curve. I don't want to get into that right now. But certainly, I mean, there's recession, there's talks of recession. All these things are kind of showing, but nobody really wants to listen to that, do they, Al?
No, we're not. We're all buying the Kool-Aid right now.
Right?
And no, we don't want to hear it. And if you think back at any time where we've had some serious downturns in the market, if you look at 2007, if you look at 2000, the good times never end.
Right.
And so in our mind, good times never end, and it's very hard, I think, for us as consumers, as investors, to believe that, hey, things can fall. I mean, if you would have spoken to somebody in 2000 and said, hey, next year we're going to crash,
right,
I think everybody would have looked at you and said, you know what, this is not, what are you, in the Titanic again?
Sure.
Like that. So
yeah, are you an alien or what have you? So it's interesting you say that, because back in December 2007, we haven't really seen these levels of savings since then. We slipped right into recession at that point. Have we not learned anything from our not so distant past, Al?
You know what? Recessions are so easily forgotten. I think pain is so easily forgotten.
Yeah.
We don't want to concentrate on it. We don't want to think about it.
Sure.
I've always said history repeats itself, and it only repeats itself because of the fact that we refuse to learn from it.
Right. Yeah.
And we get ourselves caught up, and we see the writing on the wall. We see, we have strong issues, with trade and global economy slowing down. But we kind of put our blinders on, and we feel as though, good times cannot end. This dance is just too good.
Yeah, I think you're right. So we're spending that extra money. Is it money that we have, or is it money we're going more into debt?
I think we're spending money that it's not had.
Yeah. Okay.
You're starting to see, credit card debt's going through the roof.
Sure.
There's student debt issues in this country. I mean, so there's a lot of money that's being spent that's just not there.
Sure.
However, when you get confident like that and you see the balance sheet again, it kind of just puts you in a different realm.
Yeah. Where's everybody spending it? Where's it going? We spend on cars, houses, luxurious vacations. Where's it being spent?
I think it's more on personal consumption.
Yeah.
Because, we're really not, housing is really now starting. It was being spent on housing,
sure.
But you can see that new housing sales are starting to really slow down now.
Yeah. Yeah.
And you're not seeing too many of the luxurious stuff being spent on, but there is a lot of consumer stuff. I mean, look at what Amazon's doing and things like that.
Yeah, one click away. You and I talked about that, didn't we? One click away with Amazon,
yeah.
Where, you can simply go on, find something you want, and maybe assume you're getting the best price or a decent price, and with one simple click, it's at your doorstep like 2 days later.
Actually, now they started where you can order it now, and it gets there today.
Oh, God.
Yeah, it's getting crazy. So,
just what we need.
It's sad because I was listening today, and all these big box stores that are going out.
Yeah.
The brick and mortar is going out. So, yeah, the ease of things now is there, and then the illusion of great deals is there.
Yeah.
And I think that, I think we're going to be in for kind of a rude awakening here. It's not a matter of if, it's just a matter of when.
Yeah, I think you're absolutely right. So these big box stores are going out because they're being beat up by Amazon. Going the way of Montgomery Ward's, really. Sears is gone. That's really a real estate play at this point. Kmart, all of them are gone. I don't know how they can compete with the Amazons of the world. All right, so let's talk about this. Are we getting back into this? I know we're spending, but is there any hope there about a saving mode? Or do some people have the mind frame of saving at least?
You know what? I think they do. I mean, I still think that money's still pouring into 401ks and things like that.
Yeah.
However, I don't think it's done to the level that it should be done at.
Okay.
I think that what we're seeing is that very few people are maxing out. So it's even weird to see the fact that how many people are not even taking advantage of matches being done by employers.
Yeah, that's like free money, man.
It's free money. God. And so I think that people are saving to the point where they feel like, okay, I've done my part for savings, but they haven't really taken a really good snapshot of what that really means and what that's going to mean to them when that day comes when they have to retire.
Yeah, I think they need to really wise up because they should be taking advantage of that match. They should be maxing out as much as they can. They should also, in my opinion, so when you get a bonus, that's like found money, right? Yeah, I mean, that's not part of your monthly budget. That's like found money. That should be stuffed away also. Your thoughts, Al?
Oh, absolutely. I mean, here in Michigan, a lot of the big threes, they get their really big bonuses and everything else.
Yeah.
And immediately you see the ads. The bonuses are coming because the ads on radio and TV are like you're getting your bonus, spend it on this, spend it on this,
right?
And that's more money spent than actually saved.
That's interesting. It's like tax time. You start seeing all your tax ads, right? But
yes.
Up in your area locally, you start seeing your bonus ads. That's interesting.
Absolutely. We see a lot of bonus ads.
You see bonus ads. That's interesting. All right, so let's talk about wages, changed or unchanged, to pay for all this spending.
Well, see, the thing is wages are not really growing that much.
Okay.
And if you see, the thing is if you really look at wages today versus where they were in 2007, there's really not too much change.
Okay. All right.
So what we've seen is a stock market recovery, but we still haven't really seen a wage recovery.
Oh, okay. So no wage recovery. They can get a little bit on the bonuses. What's left? Where can they go to? We're almost out of time to save.
Say that again now?
So no, the wages are kind of. We're out of time. Sorry about that, Al. Where can we find? That's all right. Where can we find you at, Al?
Hey, you can look us up on the web, summitgp.com, or on Facebook, CKS Summit Group.
All right, head on to those websites today. Certainly check out all the great information Al has. Al, do appreciate your time here on Traders Nation, okay?
Hey, thanks for having me as always.
Yeah, you're more than welcome. All right, you are tuning in to Traders Nation. Stay tuned. We'll be right back. I hope it's not that. Hey, welcome back. You are tuned in. Yeah. Who, Don?
CoreSite.
That's right.
CoreSite Realty.
CoreSite.
That's
right?
it.
COR.
COR.
CoreSite Realty trading today at $116.94 so far here today, Don. 37,000 shares exchanging hands. That's a little bit light. That's all right. Off its 52-week high, though, Don, at 120.
Oh, yeah. Not too far off. This is another one. This has got a market cap of $5.5 billion. This was a spinoff of two, the telephone hotels, they call them in those days. But this company's been public since 2009, and the company's done well, pays a nice, handsome dividend.
Sure.
And then the last one we're going to talk about here today, I guess, is QTS.
Yeah, QTS Realty currently trading at $45. That's what my notes say right there. I'm looking at them right now. $45.56, trading at a beautiful. Look at this channel on this. Bring your charts up. Bring the charts up. Steve, bring the charts up for everyone to take a look at.
Right.
Yeah. Look at this channel, man. Beautiful. Top is around $46.80. Support in your bottom is right around $43.80. Dividend coming up here, Don, 44 cents on the 24th of July. Don.
Yeah, well, QTS has stumbled a little bit. They've tried to revamp the business from a standpoint of they're focusing on the hyperscale data centers, which is the big volume companies.
Sure.
And as a result, they suffered a little bit, but once again, 52-week high, only 10 cents away.
That's right. Don, do you know anything we talked about today?
No.
Yeah, I don't either. These aren't buy or sell recommendations. You need to know that, certainly. We appreciate you tuning in to Traders Nation, making us part of your day. Have a great day.